Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good to have you back on. Thanks for making time today.
Good afternoon.
Well, stocks on Wall Street overnight saw their biggest drop since May, or in the case of the Dow, the biggest point-wise drop since last October. Corporate earnings have been good, but it seems this is because of the Delta variant of the coronavirus. What is the story in the global markets?
Yes, U.S. all three index fell quite sharply, particularly for Dow Jones. It fell by 700 points plus, which is the worst session since October of last year, as the investor continued to grow worry over the spread of the COVID Delta variant. If you look at the S&P, it fell by 1.6%. Also, NASDAQ did fairly reasonably better, but still it fell by more than 1%. Now, the NASDAQ also continued to show a fifth losing streak, since this is the longest streak of losses since the October. As I said, a continuous concern about the COVID-19 cases, the Delta variant, might cause the economic recovery to be slowed or even fall into the more of a recessionary territories again, because most of the countries are trying to close down and contain this COVID-19 new cases as this seems to be spreading much faster than it had been in the past. Of course, the case is that the death rate of this is much lower, and therefore I think the uncertainty is not going to last for a very long period of time. But nevertheless, closing down the opening is actually putting negative sentiment to the global economy. And also, the market is continuing to be still concerned about the rising prices. We are seeing the consumer price index rising very sharply for U.S., but not just for the U.S. It's happening for Germany. The numbers just came out, and that PPI number is actually highest since last 39 years. So clearly, there's a bottleneck of the supply chain, and that's continued to affect negatively in terms of the inflationary pressure. And if that continues, then people are concerned that the Fed or the global central banks would raise interest rate in a short period of time. If that's the case, then people are concerned that this is probably start of the correction for the global equity market. However, though, we don't think that the central banks will be putting measures to raise interest rate or taking away the liquidity conditions. We think that the current interest rate low environment is making people to be a bit more concerned about the domestic consumption recovery not happening for most of the countries. And if that's the case, then these inflationary pressure is not going to be long-term basis. So therefore, they're not going to touch the interest rate anytime soon. So all in all, people are very concerned and confused at the current point in time. And that's because maybe the market has risen so much in the past several months.
Well, it has indeed, and it's been a while since we've seen this kind of volatility. And you were just addressing this to an extent, but do you think this kind of volatility is something that's going to continue, or what do you see going forward?
I think that the number one, you need some time for the breathing, because if you look at the U.S. market from the beginning of the year, most of the indexes are up by 12 to 15%. So that's actually half a year rising that much. If you look at from the 2009 to 2020, average S&P rise was about 16% per annum, and average NASDAQ rise was about 20% per annum. So if in the 6 month markets were risen by almost close to the whole year average, then obviously you need some time for taking breather. And that's probably what's happening for the time being. And on top of that, these inflation number came in for the June, which we were hoping that numbers to be fairly reasonably slowing down from the previous month, but it didn't, and it actually went up to 5.4% year-on-year growth rate. So I think that market is waiting for another inflation number for the July number, which will be released in early August. We need probably some of these assurance measures before the market to further rise. But we don't think that economy is slowing down to the case where the recession happens again, because given the factor that the ample liquidity that's available in the system, and also we are seeing these inflation numbers coming through, we think the nominal growth rate will be definitely high, and economy recovery would be a good support for the equity market to further rise. So all in all, I think that we just need some time period to recognize the inflation is not going to be a major concern, or the economic recession is not going to be the case that are coming through in the future.
Well, Korean stocks are down today, too, for a third session in a row. The KOSPI getting closer to that 3,200 level, and the KOSDAQ at around 1040. Tell us about the domestic market.
Yes, as you said, KOSPI is down by about 0.35%. KOSDAQ is down by about 0.59%. However, though, it is a little bit better than what it was at 2 p.m. today. It was probably the lowest area where both indexes were down by 1% plus. But it did recover towards the end, fairly reasonably nicely recovered. But in any case, right now, because U.S. market is uncertain and that the Korean won is depreciating, and it did go up to as high as 1150 plus, and if the continuation of the depreciation of the won happens, then foreign investors are going to be not the buyer of the market, and they were net seller. And today also they sold about 240 billion won of KOSPI, and the currency movement is very important. For the time being, if you look at the South Korea's new daily cases for the COVID-19 Delta variant plus, it did show continuously over 1,000 cases per day. It seems to be happening for the past 2 weeks in a row. And if that's the case, then people are concerned about domestic consumption is not going to be strong in the future in the second half. Then maybe the Korean won might depreciate further, and then foreign investors not going to be coming back to the buy-side market. And this could cause a vicious cycle, and that's what people are concerned about. However, I don't think that that's going to be the case on a longer-term basis, because the corporate earnings are good and the export numbers are very strong. And domestic consumption of the U.S. as well as China is not going to weaken to the level that's going to cause the export to filter. We think that the Korea's export numbers will continue to remain to be very strong, even the second half of this year. If that's the case, then I don't think that the won can depreciate further from the 1150 territories. If the won stabilizes and if the earnings growth numbers are coming through for the second quarter, we think that KOSPI can recover. But for the time being, still uncertainty is there.
And finally, looking at oil prices for a minute. West Texas Intermediate's down by more than 7%. OPEC Plus agreeing to an increase in production, also the surge in virus cases. What's happening with oil right now?
Yes, I've been saying that the oil price going up above $70 and $77, that's overpriced. I've been saying that it's not going to go through the $100 plus territories as some of the U.S. investment banks are saying. We think that the range bound should happen, as I said many times, anywhere between $65 to $75 in the range. Now, obviously, the reason why the oil price fell sharply was because the OPEC Plus has agreed to raise the output, and that amounts to be around 400,000 barrels per day on a monthly, starting August of 2021. Clearly, the output increase was there. The price control that we've seen tightly by the global cases is because the if you look at the U.S. shale gas companies, they weren't really producing as aggressively. But now OPEC Plus decides to increase the production, then obviously shale gas would do the same. So all in all, that's negatively in terms of the supply side. In terms of demand, yes, demands are picking up, and it's definitely positive news. But we don't think that it's the case where we've seen in 2008, where all these oil prices were rising to the $140 plus level. We don't think that that's the case. Right now, the leak counts and the supply numbers are limited to control the price. But once the supply numbers picks up, then I don't think that the oil price can remain to be high. And we already saw price going down from the peak to the bottom by about 8% plus. However, though, at around $66, $67 per barrel, it's towards the end of the range or the bottom of the range. So we are expecting $65 to $75 range. So I don't think that the oil price is going to further fall because the demand is definitely there as the economy is recovering on global scale. And if the energy consumption is definitely picking up for the summer, and that means that the supply chain-wise, oil remains to be the very strong demand for the energy. So all in all, we think that the oil price should be on a range-bound anywhere between $65 to $75.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.